The European Central Bank cuts rates by 25 basis points. Welcome to Market Insight. I'm Ramzan Karamali. Well, in a widely anticipated move, the Eurozone Central Bank slashed rates from 3.75% to 3.5%. However, the Governing Council did not commit to a particular rate path and reiterated its recent narrative that decisions are taken meeting by meeting based on incoming data. So, should we still expect more rate cuts this year? Well, to help answer that and more, I'm joined by Fiona Cincotta, market analyst at City Index. Fiona, thanks so much for joining us. Well, today's rate cut was not really a surprise, but it looks like the ECB is still keeping pretty tight-lipped about future cuts. But what are you expecting for the rest of this year?
Yes, that's right. I mean, if we look at the reaction from the euro, it's barely moved since the release of the rate decision. So, as expected, no big surprises. But as you said, the ECB, I think they've learned from their move in June where perhaps they felt that they'd cornered themselves in and had to make a move, even though inflation was ticking higher. I feel perhaps that they've learned from that and are cautious about cornering themselves again. I mean, if we have a look at what the data is saying, we've seen that inflation has now resumed that downward trend. It's down around 2.2%, close to that 2% target. We're also seeing signs that growth is slowing. So, you know what? I think the expectations are that the ECB will move again to cut interest rates, probably not in the next meeting. I think as the market's pointing towards the December meeting, I think that's pretty likely as well, given or if we continue to see the trend in inflation and growth on the same trajectory.
Well, let's talk about growth and inflation. The growth forecasts were also cut by the ECB, while inflation is still only seen back at target in the second half of next year. So how do you think that's going to play into any decisions going forward?
Yes, that's right. I think that the move on the downward revision for growth, I don't think was that surprising, given that recent data has sort of broadly underwhelmed as far as the Eurozone is concerned. So I think that downward revision was pretty much expected. Inflation proving to be a little bit stickier perhaps than expected as well. Well, that may prevent them from moving too quickly. But again, as I said, I don't think there are any major surprises here. So I think, sticking with that expectation of another rate cut in December by 25 basis points is pretty much on track, even though we've seen those revisions.
And how big a problem do you think growth is in the whole of the Eurozone? Only this week we heard from Mario Draghi in his report saying, 800 billion euros worth of investment was needed per year to sort of kickstart the economy. Do you think it is really a serious problem for the Eurozone?
I mean, I think if we're looking at data that from Germany, there really could be some big concerns as far as growth is concerned. I think there are a few warning bells being alarmed there, and we could see another contraction as far as the quarterly growth is concerned. But I do think that if we do see slowing growth in the Eurozone, if we do see a contraction in growth in the coming quarters, again, I do think it'd be more of a technical recession rather than any deep entrenched recession. And they might avoid a technical recession as well. So I just think we're looking at stagnant growth. That's where we are. And that's what's going to be like, I think, for the coming quarters. Yes, I think investment is needed in order to kickstart growth, but that might not be happening just yet.
Now, the ECB cut back in June and then paused and now have cut today. What about the Bank of England? It cut rates last month. Should we expect a pause this month before more cuts, or should they be encouraged to keep easing next week?
I think we're going to see the Bank of England pause in the coming meeting. It's unlikely that they feel a need to act so quickly after cutting interest rates in August. I mean, if we think about where inflation is, yes, it's close to that 2% target. Growth is, well, it's stagnant, I think is the best word for it after yesterday's GDP data. But we are still seeing that wage growth a little bit higher than what the Bank of England's going to be comfortable with. They're going to want to see that wage growth slow further before I think they're going to want to make another move. I'd be putting my money on another rate cut in November if we continue to see the data trend in the direction that it's moving.
Now, what about the Fed? What are you expecting there? A rate cut seems pretty much on the cards, but how big?
Yes, that's been the big focus, hasn't it, over the last few weeks, is what size will that first interest rate cut from the Federal Reserve be. And I think given the recent data that we've seen, if we think about the US non-farm payrolls, if we think about that slightly hotter than expected core inflation data this week, then I think we can just assume that that first rate cut is going to be a 25 basis point rate cut. I think a 50 basis point rate cut would really spook the market, and the data just doesn't show that it's necessary. So I think the Federal Reserve are not going to want to take that risk, and they're going to want to see how that first interest rate cut impacts the economy before moving further.
And while I have you, Fiona, what do you make of the move UniCredit seems to be making on Commerzbank? The Italian bank's boss certainly doesn't sound like he's ruling out a takeover, does he?
No, definitely not. Came out this morning. There's this idea that actually a full takeover could be on the table. And I think this would be really interesting because here would be looking at a cross-border takeover, which we know within the European Union, it can be quite a complicated, a lot of regulation. It can also be very time intensive. But I think if we look at the benefits for UniCredit, the valuation of Commerzbank is cheap, and also, it would make it the second largest bank in Germany. UniCredit already have a presence there, so it would be in line with their current expansion strategy.
Fiona Cincotta from City Index, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.